The markets are down, and I'll give you the reasons why in a moment. Here we go.
Yes, Becky, these are wholesale inflation numbers in the form of the producer price index for the month of May. Up 0.1% on headline.
As expected.
That is very much 1/10 less than expectations. But do remember, in the rearview mirror, we had the trifecta of negative numbers. We had minus 0.5% last month. That was a very big number, the worst since COVID, or I should say the biggest drop. It isn't necessarily bad to see inflation going away. If you strip out the all-important food and energy, it remains
forecast 0.1, actual 0.1.
As I said before, these are much cooler numbers. We're expecting up 0.3. Now, this follows a big down number, as I said, down 0.4 on ex-food and energy. That was the biggest going back to February of 15. It equaled down 0.4. We've never had a bigger number, but then again, this series was modified. It only goes back to 2010. Let's take out food, energy, and trade. Once again, it's up 1/10. And once again, that's a couple tenths lighter than expectations. Last month's minus 1/10.
I'll tell you why the markets are down in a few moments.
One of those big numbers. The only other negative number we had was COVID-related, down 0.4. Now, if we look at the year-over-year numbers, and these are important, this is where the stickiness comes in. Year-over-year headline, up 2.6. As expected, but 0.2 warmer than the rearview mirror. 2.4 was in the rearview mirror. 3.4 was March. That's what we're comping to. Take out food and energy, 3%, 1/10 less than expectations, 1/10 less than last month, which was 3.1. Where does it comp to? Comps to August of last year when we were at 2.8. So in a way, been there, done that. That's the stickiness I talked about. And finally, if we look at ex-food, energy, and trade, that's 2.7. 0.3 less than we were expecting, and some progress here. 2.9 was our last look. 2.7 would equal Jan of 24 to find a lower number.
I'll tell you why the markets are down in a moment.
Now, let's look at initial and continuing claims. 248,000 on initial claims as we inch ever closer to 250,000. That follows a slightly revised 247, which becomes 248, unchanged on the week. And to put a face on this, you have to go back to October of last year to find a higher number, and we all know what that was. October of last year, you're talking about 250,000. We finally traded above that, and on continuing claims, 1,956,000, getting ever closer to 2 million. Now, this remains the third consecutive week above 1.9 million, and these are the highest numbers since Nov of 21. Interest rates really aren't changed much, but they were already well down due to some of the weakness we're seeing in equities that may have to do with that crash, that unfortunate crash. And the pre-opening equities, well, they're in the red, and they have been in the red. A very subtle amount of improvement on this data. Becky, Joe, back to you.
Okay, Rick,
thank you very much indeed. I'm going to go through what that actually means and why the market is down. Today's show is called PPI Inflation Report, Trump Tariff Overstretch. Again, you may remember, I'm right again. It's exactly what I said yesterday. Yesterday I said to you that we got some good numbers. The market didn't rally, and I'm predicting a face-ripping rally. The reason why it got halted because most of it was priced in, but also because we've had this, and this is what I said on the show yesterday, we've had such a rally, it's already baked in, it's already priced in, but that still isn't the news. The news, and why we're down today. Some of you will say it's macro conditions, tensions in the Middle East. It is not. These are real macro conditions. There is tension in the Middle East, but this isn't it. We know when that happens because we've seen it before. When Iran threatened to bomb Israel, we saw a big drop. This isn't it. This isn't what's happening today. That hasn't hit the market yet. The market isn't pricing that in or concerned about that. What is going on today is exactly what I said yesterday. And if you may remember on the show yesterday, I predicted at 7 o'clock, and it was 3.5 minutes past, I would get an all-time high. I did. I turned green on the overall, and I said we're going to get a face-ripping rally. But I said, hang on. We've already had a huge rally. And where this comes into the title of the video is this: Tariff Trump Overstretch. Trump, we've been following Trump now for a while, since he's become the president, and we've started to learn how he works. The market is learning how he works, and we understand his style. He likes to create chaos. He calls it the art of the deal. I'm not so sure it's always effective. But what he likes to do is, when he gets his way, he pushes it further. That's an overstretch. And what's happened is the markets, who are now very good at pricing in Trump, we don't have the massive overreaction that he wants anymore. He wants, when he says stuff, the market to rally or dump so we can buy it back. That doesn't happen anymore. They've kind of learned. Remember that the stock market is a forever learning AI experience. There's not people sitting there like they used to be going buy, sell. There are algorithms and levels all preset. When certain things occur and they're constantly learning, they will make their moves, all right? So what you've got today is the market has priced in yesterday why we didn't rally. Because we've had this massive surge here, they were expecting Trump to throw more tariffs out there, and that's exactly what he has done today. He sent letters out, or saying that he's going to send letters out to the EU and other tariff partners with take it or leave it. He has got an overstretch. Some would use the word, I won't, but some will use the word of bullying. Exceptionalism, bullying, saying he can just do whatever he wants. He thinks he can. He's forgotten that we are a global market and you can't just do whatever you want to everyone. So because the market is rallying, and we know, even though he might not say it, Trump looks at the markets all the time. He's very focused on the markets. He's always paying close attention to the markets, and he wants to see the markets go up. And when he sees it goes up, it gives him confidence to overstretch, perhaps be a bit of a bully in a way, to say, I can do more. And that's basically what's happened. But the market understands it. The market is bracing. It wants to go up. It's ready to go up. It might even turn green today. The macro conditions in the Middle East are not affecting the stock market at all. But what we have right now is the market pricing in that it's already baked in, and we don't want to get on the wrong side of it. Trump suddenly sends out a reaction and suddenly says, right, I'm whacking tariffs on everything. Let's just remember, he says we've got a great deal on China. It's a 55% tariff on China. Is it a great deal? Some would argue it's not a great deal. I would argue it's not a great deal. Is it complete? Trump says it's complete. No, it's not complete. There's more to do. And now we've got unilateral tariff threats going out all over the place. It's a constant battle, a constant noise of ups and downs and left and rights and all the rest of it. So, what did I say yesterday? And I've been saying this for weeks. Don't buy the rally. Don't buy the rally because we've only got 10% left this year. That's it. There is a face-ripping rally if you're on the right side of it. But if you buy into it, you'll miss it and you won't get it. You needed to already be in. Now, for me, as you all know, I bought down here that massive drop just there. Just a few weeks ago, I bought that. That's on the 1 year. So for me, it is a face-ripping rally. From bottom to top, it's about $70,000, and there's another 10% to go. Lovely, but I'm not buying into that. I even said to Sensei I think last night, I sent out a little message to Sensei going, I'm going to buy a couple more shares of VU today. I feel a bit confident. And he said, don't be silly. You got enough. And he's right. I've got $500,000, right, worth of investment, or 430. I don't need to. But when I buy at all-time highs, it doesn't affect me because I bought 99% of it at the bottom. So I can always add to it. Like long-term investors, you can always buy the top. It doesn't matter if you've got 99% of your stocks at 50, 60, 70, 80 or 100% lower. It doesn't matter, does it? It really doesn't. And ultimately, the stocks you buy today will be up in a year, 2, 5. So it doesn't really matter. So when I said to Sensei, I'm feeling like buying a couple of shares this morning, and he went, don't do it. Wait, it's not wrong. It's not right. It's not the best time. Doesn't really matter to me now. As a long-term investor, I can buy them and not worry about it, right? But if you're just coming into the market or you've got a small position and you're trying to build it, this is not the time to chase the market. It's not. There's uncertainty everywhere. But the stock market is becoming a lot better at pricing it. Trump tries to create chaos on the market, and it just doesn't work anymore. We've seen no reaction to the Middle East. This is not it. If you've covered the Middle East like I have, you will know it when we get a reaction, and this ain't it. The carry trade. Everyone is becoming immune to the system right now. Everybody is just buying and thinking, go up forever. Whatever Trump does, it bounces back, buy the dip. You're not prepared for the carry trade. That's the only story that we should be talking about, and yet nobody is. Trump's trying to take center stage. So the bottom line is this. The PPI figures were okay. Nothing amazing, as we expected. Price baked in. We've already got the reward for it. We've already had it. We're up 18% this year. If you look at my 1 year, I'm up 26 grand. I've made 17%. I've outperformed the market. Hurrah for me. Everything is wonderful, but I'm not buying the rally. Yeah, a couple of shares if I want to buy a couple of shares, and you might want to do that if you're in the same position as me. But there's only a 10% left this year. The market knows what it's doing. It's become very, very, very well tuned now to Trump. We are waiting for more clarity. There's money on the sidelines waiting to buy. There's a face-ripping rally if you are from the bottom to the top built in, but if you're at the top, it's not that much for you. But another 10% would be regarded as a face-ripping rally on top of what we've already had. That is there. But the message of the day is we've got a good PPI. It's already priced in. The market isn't rallying. It's not overreacting to Iran and the nuclear situation. The deals aren't really done. Now we've got Trump, because he feels emboldened. I'm going to use that word, emboldened, because he's done well, or at least the stock market has done well. But remember, it's not done as well as the EU and the UK. So they're having a much better run. But nevertheless, he will regard this as a good little run, and he'll think, right, now I can throw tariffs up in the air again. And the market's going, yeah, whatever. It's already built in. So just steady as we go. Don't overreact. Everything's going to be fine if you don't chase. The Fed are reducing rates twice this year. My prediction is Scott Bessent will replace Powell as the new chair of the Fed next year. And why I believe that is because Trump is a real estate mogul. That's his business above everything else. Not so good at selling wine, rubbish at selling steaks. You all know what I'm talking about. Bankrupt businesses, no one likes to talk about it, but very good at real estate. Certain times, not always. We all know the situation of one of the New York towers that he built, sold for a loss, somebody else bought it off him and then sold it for a profit just to make him look silly. We know he doesn't always do great deals. He doesn't like to talk about that one. But anyway, we know he's a property magnate, real estate mogul, and Bessent will come in, become the new chair. This is my prediction, and we will see 0% rates. 0% rates. That's where I see it going. All right, that's my reaction to PPI this morning. I'm very happy. Yesterday, I got my all-time high. I turned green overall for the very first time. It's dropped off since then. Now, you look at that and you go, oh, my God, you're down $3,300. When you've got $430,000 invested, I can have $10,000, $20,000 swings. Warren Buffett was often asked, what does it feel like to lose millions of dollars in a day? He doesn't. He just doesn't sell. Same with me. I've not lost $3,000. This will bounce right back in time. I don't need it to bounce back tomorrow. It doesn't matter. But yes, yesterday we were up like $1,500. Today we're down 3,200. It doesn't matter. I reached my target. I'm very happy. The PPI was okay, but just be aware that tariffs aren't solved and they are uncertain. And there we go.